Hello everyone. This video is regarding uh, base counting and a primary differentiation between what's a primary base and a secondary base. Okay, so by now everyone knows what's a base, right? So base is basically a price action of a stock wherein price moves sideways between two zones. Okay, sometimes that zones can be horizontal, sometimes those zones can be slightly have some sort of a slope. So in this case, Narayana Hrudalaya, once it got listed, it was basing for a long period of time, and this is basically called a primary base. Now this is a IPO stock, so and that's why this is like a primary base, which is a long primary base. But generally, primary basis occurs when a stock is in the stage one accumulation phase, right? So here after the and the difference between primary bases so and secondary bases are the first big base is basically the primary base, and they are also larger, right? And as a stock enters after into the stage 2 after a primary base breakout, what happens is that it in the whole of the stage 2 it forms small bases smaller than the primary one, and they are called stage 2 bases. Okay, and generally what happens is that you can count the number of bases and have an idea how far has the stage 2 gone. Okay, because again you know that everything is cyclical, and at some point of time it will form a stage 3 base and then reverse, uh, and so the general number of bases a stock can form in stage 2 is anywhere from 3 to 5 6. Okay, beyond number sixth base, we know that the stock has already run its course in of the stage 2 uptrend and probably will now begin to fall. And also again, like I said, the size of the bases of the secondary bases as the number of base progresses will be smaller and smaller. So a peak example I found right now while I was going through the hospital sector is Narayana Hrudalaya. So this is the primary base, like I said, it's a IPO base, and then herein we had the breakout. Okay, so what comes after breakout? Some sort of a retest or a pullback. So it's a deep pullback, and then it then goes into a stage 2. Now stage 2, what happens is stage 2 generally you have the staircase pattern. The up move is longer, and then a shorter down move, up move, shorter down move, upward, shorter down move, and at some point of time the stock bases again, right? So now after this primary base we had a secondary base here. So this secondary base is also the first base of the stage 2, right? And remember when I said that the primary bases the base counting can go up to 3 to 6 bases. Okay, that's in general on an average, right? Again, nothing is again hard and fast like so this was again a base. And see, in the base, depending upon the volume and what kind of a price action in the base is happening, this was looked like a cup and handle base. The handle took the shape of another 2t, so we can say that this is a 3t 3t VCP is sort of a base, and this is the first primary base. Now you can also from looking at the base, you can already see that the size of the base was 13 days, whereas the size of the first base, which is the primary base wherein the large accumulation happened, was 1806, right? So that was a very big base, and this was almost 5 times lesser than that, right? 5 4s are 20, so 4.5 times lesser than that. Now again, after this secondary base breakout, Narayana Hrudalaya again underwent similarly the 3t base breakout here, which will be more evident on a daily time frame, right? So in here, similar to this base breakout, this is another base breakout, but this is the second base, right? And hence this is again smaller than the previous base breakout. So this is a very good a general sort of a playbook how stocks move. You can already see how 413 and 85, right? So 8 5s are 40. So again 1/5 of the first secondary base, This is the second, and probably this will again move for some time, and then again base, and that base would probably be even smaller than that. Okay, and at some point of time everything will reverse. There will be more distribution than accumulation, and we'll have a stage 4 and then again a bigger base, right? So that is basically how stocks move. And so that was a quick video, guys. I wanted to show a peak example of this. And again, who needs to count bases and be careful about what the number of bases and all are, and that is not everyone, right? Only a long-term investor needs to be very careful, because a long-term investor's holding period itself is long. So so it will make a huge difference if that guy is if the long-term investor is buying here at 1000 levels as opposed to 400 levels, right? The more near to the primary base breakout a long-term investment is done, the better it is and safer it is, right? So as a swing trader, would it make a difference to you if you bought here or here? No, actually no, because you are only interested in capturing the small swing movement. Okay. um, all right, guys, that was the video.